Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the Aussie dollar US dollar FX for Thursday, August 22nd, 2013, leading into Friday, August 23rd. Well, a market that's interacting with the Ichimoku cloud over the last couple of trading periods. And if we look at yesterday's trading, you recall that our analysis was around this level, and I suggested that there was going to be strong support down around the first pivot point support level. And we did in fact see the market rallying to find resistance around the 90-cent level, around the Kijun-sen and Tenkan-sen, and that middle pivot point level. The market then sold off from there and ended up poking through and finding support at the Tenkan-sen, and then finding enough upside momentum to trade in a bullish manner up above the 90-cent level and the middle pivot point level. I actually didn't think that the market would have had enough upside momentum to test above there, but suggested that if it did, we would see very strong resistance around the bottom of the cloud and around that that first pivot point resistance level, and that's exactly what's happened. Now with today's trading, we've seen the market open trading and find resistance around the cloud, and that's pretty much what we'd expect. We saw the market trading almost to the top of the cloud and being strongly rejected on a fairly bearish candle that's closed down towards the lows, with the sellers taking control. With this current hourly candle as it's developing, and the market has tested down to the 90-cent level, which on the daily charts is a very, very important level, and we have seen some buying coming in here. So a market that's bound by very solid resistance overhead but very strong support below. Now the middle pivot point level once again is roughly around this 90-cent level. So if we see a bearish breakout down below there, and possibly down below the flat Kijun-sen that we have here, we could see the market testing down to around the first pivot point support level around 89.48. But if we see the buyers coming back into this market and rally the market above the cloud in a bullish manner, we certainly could see the market testing to the first pivot point resistance level around 90.59, and then a possibility, if that bullishness continues, for the market to test up to around the 91.08, 91.07 level at the second pivot point resistance level. But we really can't preempt this market. I suggest that if we do see that breakout above the cloud, that first pivot point resistance level has a good possibility of holding. Strong bearishness down below the 90-cent level, which is close by where the market's trading below the middle pivot point level in the Kijun-sen, could quickly see the market testing lower down to the first pivot point support level at 89.48. Now in terms of the Fibonacci extension, and I'm examining the relationship of this first time frame downtrend, and it is still currently developing to the previous time the market's trending down, and here we've seen the market testing to the important 261.8% level around the 90-cent area, and coinciding with this very strong support as we'd expect, and the market being rejected from there, and that's suggesting that this market will finalise as a candle where the buyers have taken control once again and the sellers have lost commitment, setting this market up for a potential change of trend to the upside. So we could see the market rally from this point. And in terms of the Fibonacci retracement, testing down through the 100% level, being rejected strongly from there, suggesting that there is a good possibility of a change of trend to the upside. In terms of patterns, we're not seeing any decent patterns in this market at the moment. There might be some sort of a wedge type pattern in here, but looking at the extent of this first time frame downtrend leading into it, it really doesn't, there's not enough of a trend in relationship to the extent of the congestion for it to be significant. We really want a decent trend moving into a pattern, so no decent patterns at the moment. Maybe looking larger term, if we look at this very strong first and second time frame downtrend to the downside, we may see some sort of a large a flag type pattern, and that may be significant. I'll draw that in. And there we have this pattern. I think I'm being quite liberal with drawing the boundaries here, so it doesn't really fit any types of patterns that we know. We probably could have drawn a wedge type pattern through there, and I'll have a look at that. So if we look at that as a wedge type pattern in the context of this very large trend here, we've had the close down below the bottom barrier, but the market has retraced back up into the congestion area, so not an ideal way for the market to behave. But it does happen that the area around the congestion can act as resistance once we have a breakout to the downside. So if this type of pattern is valid, then this is suggesting that the market may trade substantially lower, and if this type of pattern has been confirmed as a continuation pattern, the target is the extent of the trend moving into the pattern projected down, and that would give us a target a long way away from where the market's trading at the moment. But I suggest that there is some very, very solid support down where the market is trading immediately, and I'm not too confident of this pattern. I think maybe that flag type pattern is probably better, and we're looking for a breakout from that. Now, I know some may be tempted to suggest that we have a head and shoulders pattern in this congestion that the market's in, with a left shoulder ahead and a right shoulder, but really we don't see head and shoulder patterns like that. That pattern in that configuration would need to be at the end of an uptrend, not the end of a downtrend. So if anyone suggests that that's a head and shoulders pattern, that's really not quite correct. But as we look at these boundaries that I've redrawn, it just doesn't look ideal, and it's very hard to determine that lower boundary. So perhaps we shouldn't consider this to be any type of a pattern. And in terms of Ichimoku, with the market trading just below the cloud, technically we have a bearish market in the long-term time frame. We're so close to the cloud for this market to be neutral, really. So a strong change of sentiment from what we've seen in the last week or so, with the market trading well below the cloud and following the cloud down, and now finding resistance around the cloud, then trading within the cloud. This is suggesting that there is a possibility of a breakout to the upside, so let's be aware of that as we trade throughout this trading day. We have this solid support down below, and the thickness of the cloud is going to become quite small late in the trading day. So if we don't break out to the downside here early, we could see the breakout to the upside later in the trading day. The market is maintaining bullishness in that medium-term time frame by trading above the Kijun-sen. The Kijun-sen is now acting as support for this market, and that's strengthening the idea that there could be solid support around this 90-cent level and just below. But the market is also flirting with the Tenkan-sen and giving us mixed signals, trading above and then below, so oscillating above and below, so no definite idea of trend in that first time frame, in that fast time frame, where we're moving from bullish to bearish in a fairly quick time. Now, that trading period that we've analysed just now has just finished, and so those technical levels with the Fibonacci levels are now quite valid, and really here the market is trading around the bottom of the cloud, and may hold as resistance, and we could see the market sell off and test down to the 90-cent level. But really a market that doesn't seem to be too excited at the moment. We are waiting for a breakout down below 90 cents or a breakout up above the cloud throughout the trading day.